Hello traders, today is April the 18th. My name is Devil Hornsey, market analyst for YouTrading, and today I'll be taking a look at the week ahead. All right, starting with an economic calendar, quick scroll through Sunday to Friday. We can see that there are a few data points that we should take notice of. However, started with New Zealand, Australia, Switzerland, UK, and Europe all on bank holiday. So today's early sort of London session volumes are low. So if there is going to be any volatility from news, we might get a few spikes, but I'm not expecting sort of general trading to sort of expand the ranges. Like last night, GDP from China came in a lot better than expected, 4.8%, which is really good, much better than the previous reading of 4. But if we look down, retail sales year over year in China came in a lot worse than expected and a lot worse than the previous reading of 6.7%, as they came in at negative 3.5%. Now, obviously, Shanghai and other sort of central business districts are under lockdown, and it's quite severe as the cases of COVID keep rising. So I'm expecting retail sales to continue sort of dropping into the coming months, and that might have a sort of severe effect on GDP. Looking through here, RBNZ Governor Orr speaks. Now that's all about inflation. Obviously, Australia and New Zealand are suffering like the rest of us with high inflation, but RBNZ have obviously started their rate hike cycle, going up by 50 basis points last time. And if we look here, they're talking at the International Monetary Fund and World Bank Group in Washington, DC today. However, looking through a little bit further, we've got Australian monetary policy meeting minutes tonight. So traders might hold back on moving on the RBNZ sort of news, as the Australian economy is a lot larger, and we'll be expecting to sort of see some sort of detailing of why they took away the word patience from their meeting minutes, and how close they are to raising rates and maybe reducing balance sheets in the future. We're looking at an active trader platform at the Australian dollar versus New Zealand dollar. This week has started within the range of last week. So if we get above the 1.09 on a more hawkish sounding RBA than maybe traders have expected in the past, we could break up, go above the swing high from August 2020 up into this top Donchian channel here at 1.117 up to the 1.12. Looking down, later on Tuesday, S&B Chairman Jordan speaks. Now, obviously, the S&B are worried about the appreciation in the Swiss franc against other currencies. So in the past, he has said that the S&B will intervene in the markets, forex markets, when necessary. So we might get more of that, and we might sort of see a sell-off in the Swiss franc. So we could look at the USD Swiss franc. But if we just look further, Wednesday is a bit more, a few more data points really. Canadian CPI coming in probably under 1% for this month. Obviously, Canada exports oil. They're exporting inflation because the rest of the world are seeing rising inflation based on rising energy prices. Obviously, a good energy price is good for the Canadian dollar. So CPI for Canada might actually start to coming down more. Later on, USD will be affected by existing home sales. That's expected to come in lower than previous. So if we actually get a surprise to the upside, then we might sort of see the US dollar strengthen. And then we've got New Zealand CPI quarter on quarter, expected to come in higher than previous. And obviously, the RBNZ are really worried about this CPI continuing to keep rising. So it'll be interesting to see if it does come in as expected or if it's below. Obviously, that will have an effect on the Kiwi. Now, looking through here, come Thursday, we've got Fed manufacturing index for the Philly Fed. We've also got the weekly unemployment claims. We've also got Bank of England Governor Bailey speaking, along with ECB President Lagarde, and then the Fed Chair Powell speaking. So for me, probably a good idea not to trade, because 3 central bankers like this are going to cause the markets to slow right down until they start speaking, and then we're looking for an end of close sort of reaction. Then come Friday, retail sales month over month for UK expected to come in at minus 0.3% as it were before. Obviously, the UK is open. We're one of the sort of main sort of countries, if you like, Western countries that are fully open. There's no restrictions, even though pretty much everyone I know has got COVID. Looking down, French flash services PMI. This is the start of the flash PMIs. So Friday would be quite a busy day really in terms of new data coming in. So I'm expecting the euro, the pound, Canada, and dollar all to move based on this flash manufacturing and other economic data. If we were to look at the active trader platform, just have a quick look through. Australian dollar versus US dollar. Australian dollar has been coming lower since sort of start of April. So if we were to get a break below this rising trend line, we come into the dynamic support of the 20 and the 200 weekly moving averages above 0.715. So I'm expecting around here to be a support should we get a break lower on, if the RBA meeting minutes don't come out as hawkish as expected. Looking a little bit lower, euro versus the pound. We did see quite a lot of volume on this active trader platform come in beginning of March. So that week, the first week of March, there's a big sort of bullish move to the upside. We've got a swing high, weekly swing high from the 13th of March. We haven't taken out the low from that high volume 6th of March. So I'm expecting some sort of reaction to the upside, maybe break the swing high here into the 50 period moving average, get a break above that, and then go up to the 0.87. Right, looking down, euro versus the US dollar, big downtrend channel. The dollar's obviously been rising. Euro's being affected by high inflation, low economic sentiment indications, and the war in Ukraine. So euro versus US dollar making lower lows, lower highs on the swings, looking to take out the 1.06355 and then move down to 1.05 and take out this swing low here. And then if we look to the left a little bit further on the monthly chart, we can see that 1.034 is this lowest low from January 17. So if we were to break through the swing low from March 2020, that sort of pandemic low, then we're coming down towards to test any liquidity around the 1.034. Now, because the US dollar has been appreciating, major commodities like the pound, the euro, they're all coming lower. The pound US dollar is obviously making lower swing lows, lower swing highs in a sort of downward sloping trend. I do believe that these type of sort of descending channels do break to the upside. However, we need to look to the left to try and find somewhere where we could find some support. Get back below the swing low here. There's a balance area around the sort of March 20 bounce into like the July 2020 sort of range. That's obviously a lot of trading happening there. So I'm expecting to sort of see one last push down maybe if this balance area gives up and then a bounce to the upside. However, if we don't start taking out some of these lows, if say the high from 25th of October 2020, if that weekly high is essentially support, if we get a close back above that, then we could start to see this roll back up towards the 20 and the 50 weekly EMAs. Now the dollar CAD has been affected by the oil that's in a range. It's not going particularly high or lower. So oil's kind of steady now around the $100 per barrel. Dollar obviously going higher. So we could see this dollar CAD just drift to the side, whilst the dollar and energy prices are high. However, we've got a week low from beginning of March, and if we were to break above last week's high, then it could be the second time of asking on that, and also back above the 20 period moving average on this weekly chart, which then sort of sets us up for a test of this sort of relatively equal highs around 1.295 up into the 1.30 and the 200 period moving average on the weekly chart. So I am expecting dollar CAD to go higher, but I would like to see energy prices come off a lot lower. If for whatever reason Canadian dollar rises and energy prices rises, then we've got an imbalance down here at 1.217 as a target to sort of look for a bounce again on the dollar CAD. Dollar versus the yen is just absolutely storming higher. Looking to the left, we have to go to a monthly chart really. We've taken out some serious swing highs from 2015. We're now looking to the left to these swing highs from 2002. So if we were to just carry on in this sort of manner, obviously March was a massive month for the dollar versus the yen. I would have preferred for the price action to come back down towards the 116 sort of level, back into this balance area on the monthly chart. However, it doesn't look like it's going to happen. Looks like we're going to carry on up through towards the 135. But like I said, I would have preferred a pullback and then a continuation higher, just so we don't have this massive imbalance here in March. Now, DAX and UK FTSE are on holiday at the moment, so they're not open at all until tomorrow. So we look at the benchmark US 500, which is the S&P. I've got here on the weekly chart a weekly high that we're about to test. So we look here, March 2022, beginning of March, first week of March, looking to see if this swing high from end of February, that imbalance is now being sort of filled in. Just waiting for a tag of the 4336. If we get that and then a rejection, then I'm looking essentially for all-time highs again, looking for the relatively equal highs from 27th of March and the end of January to get tested. Any sort of resistance up there, we'll have liquidity now. So if we get a bounce off this weekly high from the beginning of March, I'm expecting to see all-time highs again in the near future. Now the Russell 2000, that's been dragging, well, leading the large cap indices lower. We have seen one wave down in a correction. That's 1, 2, and then another wave down. That's 3, larger correction. So we could get one last push down, maybe a failed fifth, or a big push down towards the 1700 sort of level, and this imbalance with the 200 period moving average on the weekly chart acting as dynamic support potentially around 1800. If that happens, then we could get to see the S&P and the rest of the indices also have another wave lower. If for whatever reason we get a break above the weekly low from end of March, then again that's an indication that this has now sort of based out. We're looking for a rally higher and to sort of come up and test the 2280 towards the 2400s, 2500s. Now, gold has actually surprised me. We had this mother candle from the 27th of March, then an inside bar. We broke out to the upside last week, and this week has carried on to the upside. So I'm now actually expecting to see 2,100 per ounce on gold get taken, and a continuation to the upside. Obviously, get a breakout, retest continuation up, then the gold bugs will be looking for much higher prices. If gold does continue to go higher, we could get an acceleration in the silver prices too. So we could be back above the $30 per ounce on silver. And as the Fed are in a rate hike cycle, I am expecting to see the bonds keep selling off. So we could be taking out the lows from 2018, 2019 in the near future, which then opens up, you can't see it on this chart, but it would open up a further downside as we take out the swing low and the sort of relatively equal lows from 2013 towards the end of, well, beginning of 2014. So with a rate hike cycle, no one really wants to be obviously holding bonds now. So looking for that to continue going lower. Obviously, if for some reason the FOMC start to sort of pull back from the mega hawkish stance, we could then see a massive rally in the bonds and well, essentially as US yields start to come lower. Okay, that's what I'm seeing on the charts and the economic calendar at the moment. Gonna sort of just not trade today, wait for volume to come back tomorrow, see where we all are, and then sort of look for some actual trades from then on. All right, good luck, and I'll speak to you again tomorrow.